Hey everybody, Mike here. If you've watched the previous two videos, you've probably started to get a little bit of a basic understanding of what private family banking is. Maybe some circumstances in which you can use a private family bank, some of the benefits that it may have to offer. Now that we're past that, let's take a look at why a properly structured life insurance policy is probably the best way to do this. One of the first questions that people ask is why whole life insurance? There's lots of other different types of life insurance out there. Why not those? Why don't I just put my money into a savings account instead of tying it up into a life insurance policy? Well, in order to answer those questions, let's look at some of the benefits that a whole life policy, especially a dividend paying whole life insurance policy, which is what we promote for private family banking. Why that, let's look at some of the benefits, and then we'll see if there's maybe anything else out there that has these same qualities. Okay, first, let's look at the policy itself. Okay, inside the policy, you've got tax-free growth. Okay, now that's big. There's a couple other things that give you tax-free growth, although a lot of things that have tax-deferred growth, right? Which means when you pull money out, you pay money on the gains that you have inside whatever the vehicle is, right? With this, it's tax-free growth. What this means is that if you wanted to use a policy like this as a piece of your retirement planning, you could end up getting a tax-free income stream in retirement as a result of this. Now, you have to do it a certain way. There are implications associated with using a policy in this manner, and you need to be aware of that. And I'll walk through a situation that does exactly this in a future video so that you can have an idea of what it might look like and some of the implications associated with it. Okay, next, debt reduction. Let's say you can use a policy like this to pay off your car loan or your school loans, or maybe even a home mortgage if you can build up enough cash value. Okay, in fact, this is the first thing that we recommend people do with their private family bank after they take one out. Okay, let's get those interest payments that are going to somebody else and have them directed back towards you instead. Okay. Now, here's a list of some of the other characteristics of a private family banking policy. Okay, one is that it's got a consistent high rate of return. Okay, it's a lot better option than a traditional savings account. Okay, which is probably paying what, maybe 0.25% right now. Okay, you have liquidity. A savings account gives you liquidity, but there's a lot of things out there that don't give you liquidity. You have access to your money. Whatever cash value is in there, you have access to it anytime you need it. Okay. It's also not tied to any of the markets. Okay, which means that all the volatility and uncertainty that's associated with those stock and bond markets, you're separated from all of that. Okay. Your money is protected from creditors. So a savings account, for example, they can go after a savings account. They can go after whatever money is in there. If you run into a situation dealing with creditors, they can't look at a whole life insurance policy for that purpose. Okay, it's inflation proof. Now that's an interesting one, especially today, right? With all the inflation challenges that we have going on right now. I'll have an entire video addressing why it's inflation proof down the road. Okay. Pool of money is transferable. Okay, it's a whole life insurance policy, which means the money, the death benefit, everything you can do with a whole life insurance policy, that's all transferable to somebody else. It's easy to manage. There's no need to research stocks and bonds and mutual funds. So if you needed to pull cash out, you wouldn't have to make any decisions about, I'm speculating that this particular fund is going to do better than another one. I want to make sure I leave that one in there, so I'll sell this one, and then worry about whether you made the right decision. There's none of those challenges associated with it because it's not tied to any of that. Okay, there's no fees or penalties for withdrawals. Now, yes, you do pay interest on the loan if you take out a loan, but while you have that loan out, your money continues to grow. And the interest that you are paying back on that loan is part of what fuels the dividends that you're going to collect both this year and in the future. Okay, your money's kept private. Okay, so let's say you wanted to use your cash value in order to fund your child's education. Okay, a 529 plan does not give you the freedom that this does. Figure you're gonna maybe apply for student financial aid. Okay, student financial aid office is going to look at how much money you have in a 529 plan or in a savings account or in something else, and they're going to assume that you're going to use a big chunk of that on year one as part of your tuition payment. So it's going to impact how much financial aid you have access to. With a private family banking life insurance policy, they can't see what's in there. They can't see the cash value. There's no presumption that you're going to use it to help pay for your child's education, even if that was your intention. Think about okay, with all those things in mind, think about your IRA, think about your savings account, think about a different type of life insurance. Do any of these get you all of the benefits that we just described above? Okay, let's start with life insurance. We can throw out term insurance because we know it doesn't build any cash value, right? Well, what about variable universal life or indexed universal life? These have been tossed around as alternatives to the dividend-paying whole life insurance policies that I use. Well, the advertised rate of return on variable universal life or indexed may be higher than what we advertise. Okay, that's true. We advertise somewhere in the neighborhood of 4 to 5% as your annual return, whereas one of the indexed or variable, one of the life insurance policies tied to a market, they may advertise an 8 or 9 or maybe even a 12% return. The catch is that these policies are directly tied to the market, so the value of them will fluctuate along with what the market is doing. Here's my take. If you want to invest in the market, invest in the market. Okay, I don't think that life insurance is the tool to use in order to do that. Now, our goal with private family banking is wholly different than what maybe an advocate of a variable universal life policy might have. Our goal is to give people control of their money. When you tie something that fluctuates along with the market, you remove that control, right? Giving yourself guaranteed growth and then using that money in order to recapture some of the interest that's owed to somebody else, okay, that's giving somebody control of their money. All right, the last thing I want to do today is I want to address two of the biggest hesitations that I see people having about this concept. First, they say, I already have life insurance. In response to this, I would say it probably depends on what type of life insurance you have. If you have term insurance, you can drop term insurance at any time. I wouldn't do that unless you have a replacement policy in place, but term insurance does not give you really anything unless you die, right? And then you have to die before the policy expires in order for that to happen. The second hesitation is that a lot of people just don't understand, right? It's a new concept. They've heard about some too good to be true financial instruments in the past. And to this one, I say, I get it. There's been some kind of shady stuff that goes on in the past in the financial industry. I'm going to tell you this isn't a financial instrument, just like I said in the last video. This is a financing and savings instrument, okay? Not a financial tool, okay? Now, the other thing I'll say about this is that we could run an illustration for somebody free of charge. Okay, it doesn't cost you anything to see what we'll do. And when I do that, I can do something that most financial advisors can't do. Okay, I can show you exactly what your policy will look like for the rest of your life. Okay, now if you wanted to use the policy to pay off debts, I can even give you a schedule based on the performance of your policy that you can follow as your policy grows. Why can't your financial advisor do that? Well, if they're putting your money into things that are tied to the market, they simply can't guarantee anything. Okay, they can tell you what the average rate of return might be, but the reality is they don't know what the market is going to do tomorrow, let alone 10 years from now. Okay, this is why I believe that a private family banking policy is the safest, most reliable way to grow a pool of money that you have access to and you can use anytime that you need capital for anything. We're going to continue to dig deeper on this, bringing in examples, bringing in other benefits that are associated with these. Okay, if you like what you hear, please like the video, subscribe to our channel, hit the bell so you get notifications. And as always, I'll put my contact information and our website in the show notes so that you can reach out to us if you want to learn more or if you want to dig deeper. Until next time, I'm Mike. We'll see you next time.